In many, you continue to ask about the secret sauce for success with European fund distribution. And in this video, I wanted to pack the experience of nearly 20 years in this arena and talk to you about one of the exercises that should be part of the preparation works to be successful in Europe. Let's dive in. One of the things that makes the difference between a successful European distribution endeavor and one that is not as optimal is getting acquainted with the different fund regimes that exist in Europe, and also understanding what's behind the acronym. If you follow this channel, you know that in the realm of European regulation on financial services, we live mostly with acronyms, and today I wanted to start with one of the oldest acronyms ever, which has been around since the 1980s, and it's the Ucits. Ucits stands for Undertakings for Collective Investments in Transferable Securities. For all the US managers at the other side of the Atlantic, the Ucits is similar to the 40 Act fund, but of course much more successful in its penetration globally around the world. That is because the Ucits was born essentially with the retail investor in mind, but over time it became the favorite flavor of institutional investors, not only in Europe, but also outside of the European borders. Ucits have stringent requirements for what concerns diversification, concentration, eligible assets, and essentially it's a product that works if your strategy is equity, bonds, or cash, so nothing that is too exoteric, if you like. If we look at the fact that in Europe there has been an evolution and a consolidation of the business of management companies, which are companies that manage funds for independent promoters, we see that this phenomenon could help to speed up and to reduce the cost and the commitment to launch a Ucits, because these management companies sometimes they have these sub-funds that they could rent, which give a speedier access to market compared to building your own funds. This is because Ucits can be established as standalone funds, and this isn't really the norm, but most typically as umbrella funds, which means that basically the main Ucits contains various sub-funds. Each sub-fund is independent and its assets are segregated from the one of the main Ucits, which lends itself very well to a plug-and-play scenario where you could rent a sub-fund from a fund of a management company and be in business, have access to market in a fraction of the time required to establish your own Ucits. Second acronym I wanted to talk about today is AIF, Alternative Investment Fund. Here we need to make a distinction, because the AIFs, as an acronym, was introduced with IFMD. IFMD is more of a conduct type of regulation rather than a product, as it is with the Ucits. So it governs the activity of carrying out this business of managing alternative investment funds, right? And within the IFMD, the concept of AIF was created as an alternative investment funds, which pools investments from different investors and provides them hopefully a pooled type of return. So the AIF as such isn't really a product, but is a definition, a blanket that covers different type of funds like the private equity, the private debt, and everything and anything in between. However, under MiFID II, we see that that AIF might also mean a specific product, which is the loan fund, and we wouldn't go into great level of details on this, at least in this video. Last and newest or youngest acronym we want to talk about today is the ELTIF, and this is the European Long-Term Investment Fund. This regulation was introduced in 2015 and was revamped recently. At the time of this video in 2024, we also have already the second iteration of the regulation and also some RTSs. And if you want to know more about what is changing with the second iteration of the regulation, we also linked an article in the description of this video. Long-term investment funds, at least in the ambition of European authorities, will be the new Ucits, the new brand, which will have success hopefully outside of the borders of Europe as well. The ELTIF is a type of fund that basically should cater for the longer term strategies, the financing of small medium enterprises, of infrastructure project, and it didn't have the success that European authorities wanted it to have in the first iteration of the regulation, and so in the second one a few things were changed. For what concerns non-European foreign managers, now ELTIF don't necessarily need to invest in strictly European opportunities, but also long-term opportunities that benefit Europe maybe indirectly. If you made it up to this part of the video, I wanted to thank you. I wanted to invite you to hit like to this video and subscribe to the channel. Lots more to come on the European fund business and how to be successful in Europe. Thank you for watching. Stay tuned.